Welcome to the Economy Magazine. I'm Binyamin, Tjong-Alvares with the top economic reports. Coming up today, Brazil's new finance minister steers the country on a different path, and Boko Haram's presence is felt across Nigeria's borders. First, the headlines. As West Texas Intermediate dropped to a 5-year low on Monday, below $65 a barrel, commodities and metals weighed on stock markets globally. Gold fell by 1.7%, silver slid more than 3.5%, and energy stocks on the Stoxx Europe 600 were down 3%. Oil has collapsed into a bear market following the U.S. shale boom and as OPEC refuses to reduce its production target of 30 million barrels a day. And as most U.S. shale oil output remains commercially viable at around $42, the price is likely to drop further. The Chinese economy continued to weaken in November as manufacturing slowed despite a recent cut in interest rates. China's official PMI index fell to 50.3 in November, its lowest level since March, compared with 50.8 in October. The competing PMI released by HSBC came in even lower at 50, the border between expansion and contraction. As the Chinese market continues to slow, economists expect Beijing to release a lower 2015 growth target than the 7.5% figure for 2014. South Korea launched direct trading between the Chinese yuan and the won on Monday. Neither the yuan or the won are fully convertible and use the dollar to settle their trade deals, valued at around $230 billion in 2014. South Korea, following Russia and Japan, became the third country outside China to host direct trading of the yuan against its own currency. Through the direct market, the government plans to boost transactions in the yuan to over 20% of all payments in the medium to long term.
The yuan-won market will pave the way to getting an upper hand in the Chinese market so that we can boost our economy.
Swiss voters overwhelmingly rejected proposals to boost gold reserves, impose new curbs on immigration, and abolish a tax break for rich foreigners. 59% voted against an initiative sponsored by the Socialist Party that would have abolished a 152-year-old tax break for rich foreigners in Geneva. Abolishing the so-called forfait would have cut tax receipts and led to job losses, as wealthy exiles would leave the French-speaking cantons where they reside. Only 6 of the nation's 26 cantons, including Zurich, have abolished the forfait since 2008. Following the abolition of the tax break, nearly half of forfait holders left and tax revenues dropped.
Well, the Federal Council is glad about the result of today because it's very clear that the population says no to this initiative.
Brazilian President Dilma Rousseff had long questioned European austerity measures, but following her appointment of a pro-market finance minister whose stated goal is to revive the economy from its recession, Brazil may well be austerity's next subject. More details in the following report.
It's a change of course for the Brazilian economy. Late last week, newly re-elected President Dilma Rousseff announced the name of the new Minister of Finance, Joaquim Levy. At 53, the neoliberal economist will be aiming to revive the country from its recession. But this marks a major ideological turn to the right for the president, whose leftist predecessor left office with over 7% growth and tens of millions lifted out of poverty.
We are in a transition period right now precisely to formulate a set of strategic measures. Some things that have been discussed that are aimed at decreasing costs could be ongoing, but I think our ability to cooperate with different bodies should always lead us to take measures that will be not incremental, but without packages, without any big surprises.
Just out of recession in the third quarter, Brazil showed an increase in its near-zero GDP. It was only 0.1%, but to return to the sustainable growth enjoyed under Rousseff's predecessor, Joaquim Levy is proposing control over the 6.5% inflation and austerity measures to reduce spending and increase revenue toward a budget surplus.
It is a very significant proposal because we are on track this year to having a primary deficit. So to announce a primary surplus and turn this around involves a very significant adjustment. If the situation were to become even worse, we could enter into a serious recession.
The targeted surplus is 1.2% of GDP for 2015 and no less than 2% for 2016 and 2017. This money is meant to pay off the interest of the public debt.
And we're joined now by Carly Forster from TipRanks, an independent cloud-based service that measures and ranks digitally published financial advice, for a look at what lies ahead in the markets. Ms. Forster, thanks for joining us again.
Thanks for having me.
Okay, so what lies ahead in the week?
All right, well, we have another exciting week ahead of us as retail stocks are expecting to reap in the benefits from Black Friday.
Black Friday, of course. Yeah, okay. No.
Yeah, so let's start with Amazon. Now, Amazon had its busiest day ever on Friday, with consumers from around the world rushing to the website to take advantage of the 3,000 exclusive deals that were offered.
Not too shabby.
No, it's definitely not too shabby. Now, in total, Amazon sold 5.5 million products. Now, to put this in perspective, that's 64 items sold per second.
Because we're talking about one day.
One day.
Basically a couple of hours.
Yeah, just a couple hours. But with that being said, today is actually Cyber Monday, and
right.
Amazon is expecting to rake in even more sales today than it did on Friday.
Right, because basically now people can go online and buy these products, which otherwise they would have to stampede into a store to get it, right?
That's right. Now, with competitors like Alibaba and eBay, it's only expected that Amazon is going to be offering as many deals as it possibly can.
Right.
Now, it's important to remember that Amazon is not just an e-commerce company, but they're also a huge IT company as well. Mm-hmm. Back in 2006, they rolled out AWS, or as we know it, the cloud. And recently, AWS has been gaining a lot of momentum, and investors are looking to see if AWS can dominate the cloud space.
Okay.
Yeah, it's really cool.
Yeah,
now,
good to see.
Yeah. Now, the last time that Amazon posted its earnings was on October 23rd when they posted its biggest loss in over a decade. Now, they posted a loss of 95 cents a share compared to the same quarter a year prior when they posted a loss of 9 cents per share.
Right.
Our analysts had expected that the company would post a loss of 74 cents a share. Now, even though Amazon posted a revenue of $20.58 billion, they also posted a net loss of $437 million. Now, even though the losses were larger than analysts had anticipated, this is due to the surge in that the company has been spending on R&D and product development for items like the Amazon Fire Phone, which ended up being a big flop.
Right. Well, not a very good decision there. No. What other companies are you covering?
Well, there's also Barnes & Noble, who's expected to announce their second quarter fiscal 2015 earnings on Thursday before the market opens.
Right.
Now, over the past 7 consecutive quarters, Barnes & Noble has seen a loss in sales and also a loss in demand for its e-reader, the Nook. Mm-hmm. Now, this year, however, Barnes & Noble is taking advantage of the fact that it's a physical book store.
Right.
And they had over 500,000 discounted autographed books on Black Friday throughout all of its stores in the United States.
And it paid off, I take it.
Well, we hope so. Now, investors are remaining positive that this will have a positive effect on its revenue.
Right.
Now,
it's a different kind of deal, so to speak.
Yeah, different kind of deal. So we'll find out this week if it did, in fact, pay off. Now,
celebs, right.
Analysts are expecting that the company will post 17 cents earnings per share in comparison to 15 cents the same quarter a year prior.
Mm-hmm, mm-hmm.
Now, last but not least, we have popular teen retailer Abercrombie & Fitch.
Okay, certainly not least.
Definitely not. Now, they're expected to post their third quarter earnings report on Wednesday before the market opens.
Okay.
Now, historically, Abercrombie & Fitch has performed very well during the week of Thanksgiving, but this year they actually ended the week down 1.1%.
Why is that?
Well, in addition, while the markets have gone up a lot this year, Abercrombie & Fitch has also gone down 11.5% this year. Now, this is most likely due to the negative backlash that the company has received from the offensive comments that its CEO made about what consumers can and cannot shop in its stores. So.
Okay. I see what you're referring to. Right, of course.
Yes. Now, the company is actually expected to post 41 cents earnings per share.
Yeah.
Now, Abercrombie & Fitch gets most of its revenue from the United States, but they're looking to have more of a global outreach. So right now they have 170 stores internationally, but they want to dip into the Latin American market.
Okay.
So they want to start a franchise and end the year in 2015 with 4 stores opened in 4 major Mexican cities.
Ooh.
And the reason they're doing this is so they can compete with competitors like Aeropostale, American Eagle Outfitters, Forever 21, H&M, and Zara. So it's going to be exciting to see how Black Friday and Cyber Monday is going to affect these stocks.
Okay, well, Carly Forster from Tip Ranks, thank you very much for enlightening us in terms of what lies ahead.
Thank you so much for having me.
Thanks for joining us. As Boko Haram continue to cause chaos in Nigeria, economic life across the border is virtually on hold. The next report takes us to Marua, a town of 200,000 people in northern Cameroon, where the proximity of the Islamist group has shaken the economy. Here's the story.
Life goes on seemingly as normal at the market in Marua, the regional capital of Cameroon's far north. But just a few kilometers away lies the border with Nigeria and the Islamists of Boko Haram. Despite the active presence of the Cameroonian military in the region, people in Marua aren't reassured.
I've had a bad feeling since Boko Haram started. I don't feel at ease. I think the country's threatened.
Fear of terrorist attacks has also hit the local economy. Trade between Cameroon and Nigeria has ground to a halt due to the closure of the border. Stocks of produce such as maize, millet and peanuts are piling up with no willing buyers.
Since these events began, trade has stopped. The Nigerians don't come to buy food here anymore. We're not producing anything. It's tough to make a living. Our products are lying in stock.
Contraband petrol, known locally as Zwazwa, is another popular Nigerian import that has dried up. As a result, motorcyclists have swarmed to local petrol stations, leading to queues and shortages.
We were fine before, we made a profit, but since they closed the border, we've had no more fuel.
But tourism has been hardest hit of all. Marua is on the road leading to national parks, which are popular with safari goers, but foreign visitors have been scared off by the threat of kidnappings and bombings.
They say the far north is in the danger zone, so we need ambassadors to help us, to make people come. Without foreigners, our economy will suffer.
That suffering only reinforces the sense of abandonment felt in the region, where unemployment stands at over 65%. As Boko Haram continue to cause chaos across the border, economic life here is virtually on hold.
And now for a look at the scandalous, the offbeat, and the noteworthy in Media Watch with Daniel Roth. Daniel, thanks for joining us.
How's it going?
Good. So we just heard about Amazon and how they raked in all these dollars on Friday. But I understand you have a story about the not-so-nice side of Amazon.
Yeah, the dark side of Amazon.
Yeah.
And apparently there's a great big warehouse full of dark sides of Amazon. This is a piece in The Guardian by a woman named Nicole Gracely, she has a master's degree, and she was working in the warehouse. She's a highly educated woman. She had all her future all ahead of her, and she had been working in Amazon in their warehouse, where we've reported before they have very, very harsh conditions.
Right.
They expect you to be on for 10, 12-hour shifts, just running around, and you can't stop, and you get reprimanded for slowing down. And she wound up protesting this kind of treatment, and she got fired. Okay, she got fired. She had been protesting. She went to Seattle, where the home of Jeff Bezos, and continued this protest. She was living as a homeless woman at this point because she had no access to money. She didn't. There's so much she didn't know. But what she found out was that, and this is kind of the crux of this article, this is what really hit me, she couldn't afford to be a working poor person in America, but she could afford to be homeless. People treated her better as a homeless person than as an Amazon warehouse worker. Wow. This is kind of
a revelation.
Yeah, I mean, what she found essentially is when she hit rock bottom, She left Amazon. She had no income. People in America, and this is kind of the undercurrent of this piece, the people of America kind of treated her better, saw her more as a human being than had she been faceless and nameless in this warehouse where they really, you know, the reports coming out of there are really, really astounding.
Essentially a sweatshop in America.
Right, exactly. And in America and everywhere they are, they've got these unreasonable work conditions that nobody's really done anything about yet. But the stories are starting to come out, and it's intense. Okay. The other piece we have is from Bloomberg. Very interestingly, Black Friday actually not as big this year as it had been in previous years.
Though Amazon did rake in all the dollars.
Right. They raked in big dollars, but overall spending was 11% less this year than the year before. It was a huge, huge change from what they had expected. They had expected an over 4% increase in sales. What they saw was an 11% decrease.
We're going to have to go. Thank you very much, Daniel Watt, for joining us on the show. That concludes our Economic Magazine. I'm Binyamin Tjong-Alvares. Thanks for joining us, and see you again tomorrow.